The IRA charitable rollover was originally part of the Pension Protection Act of 2006, which went into effect August 17, 2006. It was extremely popular and resulted in hundreds of millions of dollars of gifts to charities all across the country. However, it had a time limit and expired December 31, 2007. The planned giving community and legislatures fought hard to get the IRA charitable rollover back, and it went into effect again October 3, 2008. Again, it has a limited life and expires December 31, 2009. IRA charitable rollovers apply to people who are 70 and a half and over and have an IRA. IRA charitable rollovers allow a donor to make a gift to a qualified charity, including their church, directly from their IRA. The key is that this transfer is made entirely tax-free. Tax-free transfers of up to $100,000 per IRA are allowed. So this means a husband and wife, each with their own IRA, both can gift up to $100,000. For churches, this is great news. First, many people's only liquid asset is their IRA. Second, people in this age bracket generally have large IRAs. If your church does a good job communicating to their members the existence of this law Congress has enacted to make it easy and beneficial for donors to make gifts, there's no reason a church can't receive gifts totaling in the six figures. In my view, the state of the economy has no bearing on the benefits of using the IRA charitable rollover. The key is to show what problems your members have that an IRA charitable rollover solves. Here's three quick examples. First, when an IRA owner turns 70 and a half, the IRS says that they must start taking distributions from their IRA. This mandatory distribution increases each year, and many people don't want this extra income because they don't need it and they have to pay tax on it. If the person contributed the required minimum distribution to their church, they would have to itemize on their tax return in order to get a deduction. However, if the deduction was in the form of an IRA charitable rollover, in an amount equal to or greater than the mandatory distribution, then this satisfies the distribution requirement, but it's not taxed. The donation is simply made directly from the person's IRA to the church. Now, I do want to point out that the mandatory distribution requirement has been suspended for 2009. Using an IRA charitable rollover can prevent a person's Social Security benefits from being taxed. In my experience, few things raise the ire of the retirement community more than learning that their hard-earned Social Security benefits will be taxed. Depending on your income, marital status, and income from interest and dividends, your Social Security benefits could be subject to no tax at all to having 50 or 85% of them taxed. The IRA charitable rollover can lower the income used in the formula which subjects the Social Security to taxation and either eliminate the tax or reduce it. If your mortgage is paid off and your medical expenses don't exceed 7.5% of your adjusted gross income, you may choose not to itemize to simplify your tax preparation. Now, this means that any gift to your church would not be deductible. The IRA charitable rollover solves this problem. Since the rollover isn't included in your income to start with, whether or not you itemize is not an issue. If you're a high-income individual, an IRA charitable rollover can lower your taxes. The transaction has no bearing on the potential for your personal exemption to be phased out, losing 1% of your itemized deductions, or your income being subjected to the alternative minimum tax. Plus, your gift can exceed the normal cash deduction limit of 50% of your adjusted gross income. If you see yourself in any of these scenarios, I would encourage you to explore the IRA charitable rollover. If you represent a church and have an interest in building an endowment fund or raising more money, I would strongly suggest aggressively pursuing the IRA charitable rollover provision before it expires. This is Bob Cavanaugh with The Smart Giver.